Hey everybody, this is the accounting professor Bennett Tchaikovsky, and welcome. So today we're going to be looking at Form 8K in our external financial reporting and corporate social responsibility class. So let's go ahead and my disclaimer and copyright notice: the information and opinions in this presentation are those of myself only and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2025 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Note that this presentation will refer to companies and other parties or the third parties. I do not claim any copyrights that belong to those third parties. So let's take a look at Form 8K and why is this so important? Well, as we've seen so far, annually a company has to file a Form 10K, which is going to be their annual audited report. They have to file every 3 months, 3 times during the year, a Form 10Q, which is their quarterly report. And then lastly, but things happen in between those periods of time. And this is where Form 8K comes into play. And this is something that's very important for us because we need to comply with Reg FD, which is full and fair disclosure, meaning that if we tell an investor as a CEO or CFO or of a member of a company, we tell one investor, we have to share that information with everybody so that it basically can eliminate insider trading, but you have to make sure that everybody is on equal footing with regards to company information. So let's just kind of go through and take a look at some of these different types of Form 8Ks that you can go through, and then I'm going to show you some examples. So just like everything else with Form 8K as provided by the SEC, you have all of these different little areas. And so I'll just go ahead then and kind of like, reportable events. Let's just kind of go through and talk about these. So these have to be filed within 4 business days after, the events happen. So the first one is entry into a material definitive agreement, which is not made in the ordinary course of business. It has to be material to the registrant. So if I'm Microsoft and I'm making a small $2 million acquisition, that may not be material to me. However, if I'm the company that's being acquired by Microsoft, that would more than likely make the definition of materiality. Materiality is relative, and again, for that small company is in fact publicly traded, that would have to basically be disclosed. The next one is the termination of a material definitive agreement. So again, we're terminating one, and I'll show you an example of that. Bankruptcy or receivership. So if the company has gone into bankruptcy, mine safety. Yeah, I've never Minecraft. I don't know. Material cybersecurity incidents. So that if a company had, say, something where, they had a major cyber attack, that would have to kind of go through and be put over here. Um, Now, the other thing too, in terms of materiality, is this is something that materiality is something that's very difficult to define. It's, would it make a significant difference for an investor, and something that may not be material initially may become material later. So it's really important that you go through and speak with your company and you speak with counsel. Let's go ahead and look at the next one. Financial information: completion of an acquisition or disposition of assets, results of operations, and financial condition. And this is an important one for us accountants because when a company issues a press release that contains numbers, you have to go through and make sure that you're reviewing those. Creation of a direct financial obligation or an off-balance sheet arrangement of a registrant, triggering events that accelerate or increase a direct financial obligation, costs associated or exit of disposal activities, and then material impairments. So not to make light of a situation, but if 90% of my property was in the Pacific Palisades and I was a publicly traded company and it just went up in flames, you'd be filing an 8K within 4 days of that event. Um, Section 3, securities and trading markets. If been given a notice of delisting, or if I fail to satisfy a continued listing rule, what's going to happen is that the NASDAQ or NYSE is going to send me over a notice. I've got to file that within 4 days. Another one is unregistered sales of equity securities, and then the material modification to rights of securities holders. Other thing over here, matters related to accountants and financial statements. If I change my certifying accountant, that has to be published. And then also, if there is non-reliance, meaning that if I've discovered fraudulent activity, previously issued financial statements or related audit report, I need to go forward and put that out there so that I'm basically telling the world that you can no longer rely on the financial statements I've previously published. Here we go, and I'll give you some examples of this one too. Changes in control of the registrant, departure of certain directors or officers, election of directors, amendments to the articles of incorporation, temporary suspension of trading, amendments to our code of ethics, change in shell company status, submission of matters to the vote of the security holders, and then shareholder director nominations. And then you see basically Section 6. And when you get into Reg FD, you would file either under, what I've seen is that if I'm going to have a press release where I'm going to be, okay, I'm presenting at this investor conference, I'm generally going to file the investor presentation that I am making as a form 8K, right? So I'm going to go through and file that as a form 8K so the world knows that, what I'm going to be going over in that presentation. And then lastly, financial statements and exhibits. So let's go ahead and take a look at the samples over here, and I've just kind of pulled up some random ones. So here we go. We've got from the Home Depot, and then we file. This is a Form 8K current report, right? Because this is something that's happened that we need to let everybody know about. So termination of a material definitive agreement. So right over here, as previously reported, they entered into a $1 billion 3-year revolving credit agreement dated May 7th. And then right over here, the company entered into credit facilities, which closed on June. However, effective this, the company terminated that 3-year credit facility after determining it was no longer necessary. There was no borrowings under it. So they're just telling you that this was a material agreement, and they decided to terminate it. Other events, like for full and fair disclosure, the company reduced the aggregate commitments under the 364-day credit facility in accordance with its terms following the termination of the 3-year credit facility and the reduction of commitments. So again, you've just got here is like 2 for 1 in terms of a Form 8K. And why is this important is because if, say, for example, on item 1.02, if there were people that were aware of this termination and the Home Depot, and if it was material enough, and the Home Depot didn't tell everybody, well, this is December 18th. They're not going to publish their financial statements until January 31st, because they're at January 31st, fiscal year end around that date. So they have to go through and file this 8K. Remember, the goal of this is to really make sure that all investors are on equal footing. So let's go ahead and take a look at this next one right over here. This is basically for the results of operations and financial condition. So what you see over here is, again, a 2 for 1 special, is that we went through and issued a press release announcing our financial results. The information included in this O2 is basically put in Schedule Exhibit 99.1. Again, it's basically giving the company, so you kind of look over here, they're filing this as an exhibit. And as an auditor, we would want to be going through and reviewing this press release. Now, what's really important is that when we go through and we basically see these different parts, is these are like non-GAAP financial measures. And if you go through and give non-GAAP financial measures, you have to kind of go through and reconcile that in terms of how you're going through and showing it. So the auditors before Home Depot released this, and I think their auditors might be KPMG, but don't quote me on that. They would need to basically make sure that everything in this press release it's basically it's been vetted. I think that's actually a question that's shown up on the CPA exam is that what's the obligation as to financial press releases? And then let's take a look at this last one over here for another one here for the Home Depot, and I'll link all these in the video, is basically departure of certain directors inform the company he'll be retiring effective December 31st, 2024. And then he will no longer serve in his current role of EVP customer experience, but he'll remain executive vice president and serve in an advisory capacity. There you go. So again, if someone's stepping down from the board, then that again is going to basically be on a Form 8K. So again, when you look at this, again, the real just think about this particular form. It's that we are filing it because we're in between. You've got the annual report, the 3 quarterly reports, what happens if things happen that are material to the company, and you end up filing an 8K so that everybody out there knows about what's going on. So I want to thank you for watching and subscribing. Please remember to like and subscribe. Helps the channel, and I look forward to seeing you on future videos. If there's anything you'd like to see, please feel free to leave it in the comments below. Have a great day.